Hi, everyone. It's Darren Coleman, Senior Vice President and Portfolio Manager with Raymond James in Toronto. And I'd like to welcome you to a very special election special, we'll call it. I'm joined today by our Washington policy analyst, Ed Mills. Ed joined Raymond James about 3 years ago. He's our guy in Washington. You're normally about a block away, but I guess if you're working from home, you're, as you said, just across the bridge. And you work on behalf of Raymond James and the clients here to really understand what the policymakers are doing in Washington and give us some guidance on like how elections will unfold, trade policy, Wall Street reform, all the things that come out of Washington that wind up affecting us. And as interested neighbors, as Canadians, and also we have the largest cross-border practice in the firm. So we have a lot of Americans in Canada, Americans in America, Canadians in the US. So this election that we're watching is quite the thing. So maybe what I'll do, Ed, is I'll ask you the question that I keep getting asked, which is, who do you think is going to win?
Yeah, great question. What we have said is that we have given a 65% probability to a Biden election, 35% probability that the president wins re-election. On the House, it is above 90% probability that Democrats retain their majority. And for the Senate, we're kind of above 55%. When we get into all the different scenarios, we don't ever want to say, oh, it's a 2.5% chance of this or that. So it's, north of 50%, north of 55% that Democrats win the Senate as well. We think the most likely outcome at this time is a Democratic sweep with this election. But I think there is still plenty of, kind of twists and turns. 2020 has been nothing but unusual. So we're going to have to wait until the votes are counted to see if what we're seeing in the data, kind of in the predicted markets, in the polling, based upon all the conversations we have on a bipartisan basis, whether or not kind of that is correct this year, or if 2020 is going to throw us another curveball.
Yeah, and there's certainly, at least as a spectator, there seem to be some really strange things coming. Some of them, whether it's Hunter Biden's emails on a laptop that he forgot at Radio Shack or something. But I think a big one is the stimulus package bill that seems to become quite a pawn in this game. So those are a couple of elements. Are there other things investors and voters should be looking for that are potential news items or big things that can move this around a bit more, a few more on the horizon?
Yeah, I mean, I think that we are, always looking to see kind of what any new news cycle will provide us. But I think as what I hear most from investors is they just want to know that there's going to be a clear outcome in this election, that they don't want to have a prolonged vote count. They don't want to have court cases going to the Supreme Court. They don't want fights kind of over the Electoral College. I think what I hear from investors is if there's a clear outcome on or around November 3rd, that's a market positive. The real risk to the market is a prolonged fight and not knowing who the president is into December or even into January.
So that's interesting because with all the mail-in ballots and everything else, this may not get decided on election night. And I was reading an article in CNN Business today that you were mentioned in, which your point was the market might figure this out before the official word comes in. So do you want to explain that a little bit for the viewers?
Yeah, I mean, Darren, you make a good point. With kind of an elevated number of absentee ballots and mail-in ballots, what we're seeing from the news networks is they're telling us they're going to be extremely cautious in calling a winner until they're above a 99% probability as to who has won the state. And there's going to be some blind spots into that analysis. How many more ballots are in the mail that have not yet arrived to the election bureaus? But what we did is that we looked at how the ballots are cast and how they are counted in every single state. One thing that is very unusual about our elections is, despite the fact that this is a federal election for president, it is up to every single state to set their own rules, and sometimes it's up to individual counties to set their own rules. So as of today, there is a number of swing states that are already counting the ballots that have been submitted to them. Florida started counting last week, North Carolina, Colorado, Arizona counting this week. There are some states that don't start counting until the polls close on election night. So one state I'm looking at is the state of North Carolina. North Carolina is counting now, as I mentioned. They usually are very efficient on counting the day of, and they are one of the closest swing states. You look at any polling data, and it has Trump or Biden up by about 1 to 4 percentage points. What we see in swing states is that they usually tend to swing in all one direction or another, and in the final days. Sometimes we call them toss-up states, but that would imply that you could come back to me and say, all right, you said these 8 states were toss-up, which 4 went in this candidate's direction, which 4 went in that direction. It never happens that way. It usually all goes in another direction. If there is an error with the polls, there is a high correlation among the swing states with those polling errors. So on election night, if say a state of North Carolina, if it is clearly broken in the direction of Joe Biden, and it has a Senate seat that is held currently by a Republican, if that Senate seat has gone in the direction of the Democrat, I think it is very clear that we're looking at a blue wave in a Democratic sweep. If it's close, we might be in that scenario where we're going to have that prolonged election cycle. If it is clearly broken in the direction of Donald Trump, we'll see how much of a polling error had occurred in North Carolina. And that's where we could be in 2016 again, where kind of all of the conventional wisdom in the polls were wrong.
That's interesting. Now, just a point, a lot of our clients know that my son goes to school in North Carolina, so he didn't do whatever happened. Okay, he's not in charge of that.
It's all his fault.
But, well, we won't blame. He can't vote.
I know.
He's down there. But so one thing on top of that is you had mentioned a bit earlier that it looks like the market thinks Trump's going to win. That seems to be kind of baked in to what the market performance is. But if it turns out that you're right and it's Biden, is the market actually looking that they think the market thinks Trump's going to be the winner? But if it isn't, how often does the market get this right or wrong? Because certainly, well, and I'll also ask, what did we learn from last time when everyone thought Clinton was going to win?
Yeah, so this is a great question. So this goes to kind of some of the historical performance. And so when I speak to individual investors, when we do some polls on some of our calls, we do see investors are pricing in a Biden victory, but that goes in the face of what historically happened. So going back to 1928, the market has predicted the outcome of the presidential election in the United States 87% of the time. So generally speaking, in the 3 months leading up to the election, if the market is up, the incumbent wins or the incumbent party wins. If the market is down, the challenger or the challenging party wins. Back in 2016, the market was down despite all the expectations that Hillary Clinton was going to win. And the market was the one thing that actually was accurate in predicting that Trump victory. In 2020 here, the market's up despite, again, that anticipation from a lot of the professional prognostication that Biden is going to win. So what I did is I looked back and said, what were the last time where the market was up and the incumbent party or the incumbent president did not win? That was in 1980 and 1968. So 1968 in the United States was a year of great civil unrest. The United States was in the middle of the Vietnam War. 1980, there was the Iranian hostage crisis, lots of stagflation, kind of 2 very unusual years. And so I'm kind of debating as to whether or not the market's telling us something that we're not all expecting, or is 2020 kind of better bucketed with unusual years of the past, like 1968 or 1980. If I had to call it, I'd put kind of 2020 in the bucket of unusual years. That's not a difficult call there.
Yeah, I think 2020 will give any year a run for its money if no one saw that one coming. I heard someone mention that Tiger King was the most normal thing of 2020 so far, and I think they're right. There's been I think as a spectator, there's been a remarkable, I'd say, lack of policy debate. This seems to be very much a contest driven by personality more than I like that guy, I hate that guy. But from a policy perspective, and I'll kind of say it as Canadians, Trump, when he came in, much more aggressive about trade policy with global international trade partnerships and things. If we get Trump again, we'll probably see that. We already know what that might look like. If we do get a Biden victory, what may trade partners like Canada see as a difference, if any?
Yeah, it's a great question. So, I mean, I think you're absolutely right. Kind of rewriting the USMCA, kind of the new NAFTA, certainly were hallmarks of the last several years. The tariffs that were imposed on kind of steel and aluminum and other items with kind of our neighbors and our traditional allies were very unusual events to occur from a trade perspective. Going into kind of the future, if there is a Biden administration, I think the general sense that I get is that it's going to be a reset in a desire to kind of really pursue diplomacy with our traditional post-World War II allies and kind of travel the world rebuilding the NATO alliance, ensuring that the United States and Canada has a strong bilateral kind of relationship. And I think even when there's going to be disagreements, because there's always going to be disagreements, the kind of process is going to be more predictable. Probably the thing that has kept me the busiest is that I was always one tweet away from having to drop what I was doing and writing a whole new research note and kind of getting on the phone with clients explaining how does this impact X relationship or Y relationship. So that return to a traditional approach is really going to be the biggest change in my mind.
I think you just came up with the title for a book if you want to write it about the Trump years, which is One Tweet Away. I think that's a great title you just gave us for that. So that could be interesting if it is a Biden win, and I'd say trade policy becomes a little more friendly, or international relations seem a bit more friendly and maybe more predictable. But in terms of tax policy, because this is one that's causing a lot of the clients that we have to be concerned, because Trump did a lot in terms of tax reform that was not maybe as well delivered as it could have been. It caused a lot of chaos for for Americans in Canada and how they implement things like the GILTI tax. With Biden coming in, it looks like he's got a much, again, a wider sweep of what he wants to do in terms of tax policy. But it looks like the general tone would be to raise taxes, corporate taxes, personal taxes on some, maybe not for others. If that happens, do you guys anticipate people leaving the United States? I mean, we're seeing people like 50 Cent wants to leave California, which is amazing because he said he doesn't want to be 20 Cent, which is cute. But does that seem like a part of the election, like the tax policy, or this really hasn't been a policy-driven contest?
No, I mean, I think that, taxes are the number one question I receive about a potential Biden administration. Tax changes only really occur if there is a Democratic sweep and Democrats have control of both the House of Representatives and the Senate. When I've had conversations with tax experts here in DC, they tell me to think about it in two buckets, a short-term bucket and a longer-term bucket. That short-term is really all about a recovery package, and that would be done in the February-March time frame. The size of that really will depend on whether or not something gets done before the end of this year for fiscal support of the economy. In that package, there is an anticipation that there are two pay-fors that you would have to be paying attention to. One, a potential increase in the corporate tax rate. Mm-hmm. The high watermark probably is going to be back up to 28%, but we might see a move from 21 to 25, as well as international tax tweaks. The GILTI is something that is going to get a real re-examining, whether or not that is not capturing enough taxes on U.S. companies with large multinational presence. And so international taxes are an easy thing politically to add to because there's no domestic constituency pushing back frequently on those. Longer term, it is a full conversation of what is the appropriate corporate tax changes, individual tax changes, and retirement tax changes. I think that's a year-long process. The Biden campaign has said that they are only going to do that for households above $400,000 and in the investment taxes above $1 million. How that gets implemented, I think, has a lot of different gives and takes and political decisions. From a market perspective, in a Democratic sweep, we certainly could see kind of some weakness in some of the high flyers of the last several years, as people might try to take profits to avoid some of those, kind of taxes going down the, into the future. I think that's a buy the weakness opportunity, especially in tech stocks.
Well, and on the tech stock thing, one thing that I've been hearing that might be a concern is, especially if it's a Biden victory, is are we going to see a return to these antitrust things? I just saw a lawsuit filed against Google. Like some of these large companies that have got, and there's issues around privacy and their control of data. Is that maybe going to be an issue for some of these big tech companies that under a new administration, their shares might be under some pressure as policy changes come in? Is that something that we should be watching for?
Yeah, for technology companies, certainly the conversations I've had over the last several years on technology has gone up. I think the bigger impact in the last year or so has been the U.S.-China relationship and a decoupling that has been occurring, especially related to Huawei. Canada has certainly found itself in the middle of that dispute. But the technology decoupling is a real story as it relates to democratic policies. There is a debate on whether or not you could see a privacy bill, certainly a desire. But when I've talked to the committee staff working on this, they sometimes it's like, oh, this tech company came in and they're totally on board with this new privacy bill. I'm like, well, of course they are, because, sometimes we talk about too big to fail in the banking sector. Within technology, it's, if we see a national privacy law, some of the biggest players are going to be the biggest beneficiaries, because we're going to have a lot of companies that are too small to comply. We're going to build a bigger moat around some of these companies. So, as I look at DC regulatory risk, it's something you have to follow. But to me, it has not been the reason not to own these tech companies. A lot of these things have unintended consequences that could further ensconce their position in market share.
That's interesting. Okay, well, let me move. I'll use the word of 2020. Let me pivot to I'll go with the assumption we have a Biden win and a Democratic sweep. Are there certain industries that you think are going to have a greater opportunity set because of the policy changes that a Biden victory and a Democratic sweep would have, or certain industries we ought to maybe look at avoiding? Like energy, for example, Trump was a supporter, but that's been a horrible sector to invest in. So how should investors be evaluating this?
Yeah, it's a great question. And I think that's a great point. I think one thing to kind of highlight on energy is that in a Biden victory, there is a push in the United States to rejoin the Paris Climate Accords. I think there is questions on the permitting process going forward on the Keystone XL pipeline, whether or not kind of the Biden administration would try to be aggressive in those perspectives. But as you mentioned, we have had a cheerleader in the White House for U.S. energy, and it has been the worst performer of the kind of S&P 500. So the way I would look at the market reaction is probably first on fiscal stimulus. So there is an expectation in a Democratic sweep that would give us the most spending coming out of Washington, D.C. Probably one of the lesser appreciated aspects of that is that two things are probably going to happen. One, the yield curve, U.S. Treasuries on the long end, go up out of inflation concerns. A steeper yield curve is a benefit to financials. Another thing happens. If the United States is spending all of this money, that is likely to weaken the dollar. So large cap multinational corporations with a lot of overseas profits would get the benefit of a kind of more favorable exchange rate. And I think there would be a kind of rotation into those names. I think near term, some of those concerns about technology and taxes might see some weakness and see a little bit of a rotation early on. But if we are going to have another fiscal stimulus package that sends checks to every American, gives more unemployment, consumer staples would certainly benefit. A lot of retailers would benefit in that scenario. Longer term, we then have to pivot to kind of concerns about increases in tax rates overall, in regulation, in cost to businesses. So I'd say kind of the near term trade is actually kind of, from almost everyone I talk to, kind of is kind of biased to the upside for the market generally.
Well, that's interesting. So I think I'm almost done because I appreciate your time. And I know you have a lot of people lined up to chat with you. Indeed, Raymond James in Canada nationally is doing a webinar with you in about a week and a half. So we got you first. But one of the things that's been interesting is how many people got the last election wrong. You know, a lot of people predicted Clinton was going to win. She didn't. A lot of people thought if Trump wins, it's going to be bad for the market. Well, until the pandemic, I think the market went down for about 4 minutes at 3 o'clock in the morning, and then went straight up since then. So for as investors and even the press, like what are some lessons that we've learned where people may have gotten things wrong that we need to kind of be mindful of as we go into the next few weeks? Are there things that you think that people should say, don't focus on that, think about this instead?
Yeah, so this is often kind of the question about polls. Yeah, kind of were polls accurate? And so it's interesting to look back. I think there was a cognitive bias out there that there was just a lot of people who couldn't envision Donald Trump winning. Right. And so going into the final kind of polling data, Hillary Clinton had a 3% national lead, and she was seen as having a 90% chance of winning. Right now, the lead for Biden is in that 9 or 10% percentage, and it's like his chance of winning, from a lot of folks is lower. And so I look at that and say the polls have to be exponentially more wrong. They absolutely can be wrong, but they have to be more wrong than they were in 16. The real problem in 16 were the state level polls. And a big part of that is that Donald Trump won in some areas that he just was not expected to win. When you look at the map now, if you kind of look at what is being polled well, he has to win those areas to have a shot at the election. The level of quality of those polls are much more, and they are not overweighting some of the pro-Biden or what was the pro-Clinton groups. And even if the polling error, which was really much more significant on the state level, was again as wrong as it was in 2016, at least as we look at polls today, that wouldn't change the outcome of the election. So what I look for here is, are polls going to tighten? If things get within 5 percentage points, that's where kind of a normal polling error would give Donald Trump the opportunity to repeat what he did in 2016. If it's not, it would be something kind of more historically wrong. And so that's what I'm watching kind of as we kind of get into the final weeks or days of this election. Is there any movement? Which so far, we really haven't seen that movement.
Well, it's not over yet, as we know, so we will be watching closely. But I think the key takeaway is, as investors, is that the biggest risk is if it's a contested election. If this unfolds in a bad way, that's really the big risk from our perspective. But otherwise, I think a lot of these things we can kind of forecast and deal with to some extent, right?
Absolutely.
Okay.
Yeah, historically, the market has been up when there's been Democrats in the White House. The market's been up when there's Republicans in the White House. On average, kind of, there's not a statistically significant difference. The economy is the bigger driver, and it's on the subsectors that have kind of the more noticeable changes based upon political leadership.
Fantastic. Well, listen, if it does look like it might go sideways, maybe I'll ask you to come back and do an update on what happened.
That'd be great.
But thank you for your time today. It's great that Raymond James has got this kind of horsepower for due diligence and research and work. And I've met you a few times at our conferences, and I know you always bring us as Canadians a perspective that we don't tend to get in the press. So thank you for doing what you're doing. And on behalf of our clients, I'm glad you're there. And on the viewers, thank you for watching and tuning in. And we'll keep on top of this as best we can. So Ed, with that, thank you very much. And for the viewers, thank you.